Welcome to the world of Test Portfolio XSX. This video was created with the help of artificial intelligence. It provides a weekly summary of key economic events. The featured portfolio is simulated, fictional, and reflects my personal perspective on recent market developments. My main goal is to explore whether the S&P 500 can be outperformed. To do this, I compare the performance of three different portfolios: my own fictional portfolio, an S&P 500 portfolio built using a lump sum investment strategy, and an S&P 500 portfolio built using the dollar cost averaging method. This video reveals which strategy performs best and why. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur. Ready to get started? Let's go.
On Friday, Donald Trump announced a 50% general tariff on every import from the EU and a 25% surcharge on every iPhone assembled abroad until Apple repatriates production. The news caused an instant pricing shock. Apple, 3%, semiconductors and luxury car exporters sold off and European exchanges fell 2%. The market fears not only higher input costs, but also the danger of a full trade retaliation that could once again chain global supply routes. The 10-year Treasury closed at 4.51%, while the 30-year briefly spiked to 5.04%, levels last seen in late 2023. Why does it matter? Higher discount rate, future profits are worth less today. Growth AI names suffer most. Credit cost shock, mortgages, auto loans and corporate bonds all get pricier. Fiscal concern, yields are rising now not on inflation but on the record budget deficit and lingering Moody's downgrade fears. Chris Waller, one of the Fed's toughest hawks, stated in a Fox interview, "A rate cut only if the tariff war cools down and inflation slows again." That sentence effectively pushed the market-priced first cut out to autumn 2025 and added fuel to the yield rally. Fresh minutes also speak of persistent risks to the inflation path, so don't expect cheap money while trade uncertainty lives on. Initial jobless claims, 227K. The labor market remains tight, no quick easing ammo for the Fed. Existing home sales, 5% mum, inventory plus 9%. 7% mortgage rates suffocate demand. Housing is the first casualty of higher yields. Flash PMI composite, 52.1. Services pull upward. Industry still flirts with 50. The economy is not crashing but hardly racing. Tariff fear plus yield spike plus Fed caution = triple pressure on risk assets. Until that triangle loosens, rallies are more likely to fizzle than to last.
Let's now look at the earnings reports broken down by sector. Technology Intuit, financial software TurboTax and Company. In its third fiscal quarter, it recorded USD 7.75 billion in revenue, a 15% year-over-year increase, while adjusted EPS came in at USD 11.65. Management therefore raised full-year guidance on every key line. The market loved it. The share price jumped roughly 8% in after-hours trading following the report. Autodesk, CAD software. In FY26 Q1 revenue rose to USD 1.63 billion plus 15% YY, and non-GAAP EPS reached USD 2.29. The company delivered a beat and raise report and guided the second quarter above consensus as well. The stock gained more than 2% in after-hours trading. Workday, HR and Financial SaaS, FY26 Q1 revenue was USD 2.24 billion, plus 12.6%, with cloud subscriptions contributing USD 2.06 billion. Although profit beat expectations, the firm merely maintained its prior full-year outlook, which disappointed investors. The share price fell 12–13% in a single day. Consumer goods, retail raw stores, off-price retail. First quarter revenue came in at USD 4.98 billion and EPS at USD 1.47, both a hair above consensus. However, management withdrew full-year guidance due to tariff risks, which the market rewarded with an 11% drop. Deckers Brands, Hoka, Yug. Fourth quarter revenue reached USD 1.022 billion, plus 6.5%. EPS increased to USD 1.00. Hoka's growth is slowing and the company issued a weak Q1 outlook, partly because of potential new tariffs. Result: nearly a 20% share price plunge in one day. Industrial and Business Services Copart, online car auctions. In Q3 it achieved USD 1.21 billion in revenue, plus 7.5%, and EPS of USD 0.42 met expectations, but the revenue miss pushed the stock down 11-12%. Investors simply will not tolerate a top line below consensus. Booz Allen Hamilton, Government Consulting, IT Services. In fiscal Q4 revenue was USD 2.97 billion, and adjusted EPS USD 1.61, revenue slightly missed forecasts. The FY 2026 guidance was soft, and a 7% workforce reduction was announced. The stock dropped about 16% in a single day. Materials, mining Silvercorp metals, silver, lead, zinc. For the full FY 25 it posted USD 75.1 million in quarterly revenue, plus 76% YY, and adjusted EPS of USD 0.07, but reported a GAAP loss for the fourth quarter. Owing to cost and permitting uncertainties, the share price weakened roughly 4-5% after the release. Key takeaways: guidance above all else. Raised outlooks earned Intuit and Autodesk a reward, whereas subdued outlooks for Workday, Booz Allen, or Deckers were punished immediately. Political risk weighs on discretionary consumption. The China tariff issue instantly dragged down Ross and Deckers shares, numbers notwithstanding. Revenue miss equals instant sell-off in industrial service names. Copart is textbook, inline profit but slightly weak top line, double-digit drop. Adopt this mindset. Don't just watch the headline EPS, scrutinize management commentary and the macro-political backdrop, because the market is currently pricing anything that could affect future profitability at lightning speed.
NVIDIA. Quick context. Today is May 24th, so it's the last weekend before the quarterly earnings release. The video is not investment advice, but a snapshot of the situation. Always do your own research before making a decision. Export controls and tariffs, where does it really hurt? Last autumn, the United States banned full-spec exports of H100, H20 GPUs to China. NVIDIA reacted in 2 steps. H20 Lite, the same chip but with lower memory bandwidth, 1.8 terabytes per ES, to meet the rule. Distribution is expected in July. Blackwell 6000D or B40, a simplified GDDR7 version aimed specifically at the Chinese market, debuting in June at a price between USD 6,500 and 8,000. With this, they hope to regain half the market lost to the regulation. The tariff war adds cost and uncertainty to the entire supply chain and forces NVIDIA to choose assembly in Mexico or Malaysia for the US market instead of Zhuhai or Taipei. Based on what we've seen so far, I wouldn't completely rule out further tariff war uncertainties. Product line: Hopper, Blackwell, capacity issues. Hopper H100/H20 is still the training standard in the West, but the H20 can only be sold in China in limited form. Blackwell B200/GB200 is the next big thing, up to double the performance per watt, but CoWoS packaging and HBM memory have created a manufacturing bottleneck. Jensen Huang therefore asked SK Hynix to bring forward HBM4 deliveries by 6 months. The China-optimized 6000D/B40 version does not use HBM, so it puts less strain on scarce capacity, but it is a performance compromise. Key partners and mega investments, and the 1 million GPU story with Elon Musk. Oracle Cloud Infrastructure is already building the cluster that will use well over 100,000 Blackwell GPUs. Behind this is a USD 40 billion chip purchasing agreement whose first stop is the Stargate data center in Texas. Saudi Arabia Humane, a project starting with an 18000 unit GB300 supercomputer, aiming for a 500 MWAI factory within 5 years with hundreds of thousands of GPUs. This secures long-term demand for the Blackwell family. At the end of April, Elon Musk said that xAI's Colossus 2 inches supercomputer would need 1 million NVIDIA chips. They are currently at about 200,000 units. The final goal is 5 times that. He wants to raise tens of billions of dollars in capital for the build. This single project could tie up a significant share of Blackwell generation capacity for years. Competitors. The temperature is especially high in China. The Huawei Ascend 910C, essentially 2 910Bs linked together, enters mass production in May and approaches the performance of NVIDIA's H100. Chinese clouds and state projects already treat it as the default after the restrictions. So according to Jensen Huang, NVIDIA's local share has fallen from 95% to about 50%. In Western markets, AMD's MI300X is trying to catch up. But thanks to the Q-Day ecosystem advantage, it is still more a complement than a replacement for now. What is the market expecting from the earnings report? According to analyst consensus, the quarter that ended on April 28th could deliver roughly $43 billion in revenue and $0.87 adjusted EPS, which is 60 to 70% year-on-year growth. On the conference call, everyone will focus on at what pace is Blackwell coming out of the factory? What will the gross margin be if costs rise due to tariffs? What price premium can NVIDIA command while the competition is catching up? The options market prices in a move of about plus 7% for the day after the report. Even a smaller negative surprise could trigger high volatility. Key takeaways in brief: export and tariff risk. Short-term pain in China is real, but there is ample global demand to offset it. Chinese slowdown end of the world. Blackwell-based mega projects, Oracle, Saudi AI factories will occupy most capacity until 2026. Supply chain HBM and CoWoS capacity remain the bottlenecks. If SK Hynix or Samsung slips, unit counts will show it immediately. Competition: Huawei is catching up in China, AMD is pushing in the West. But neither has the CUDA software ecosystem, which remains a strong moat for NVIDIA in the short term. Closing remarks. If margins don't deteriorate in the earnings report and the Blackwell schedule holds, the market will likely react positively. But remember, the tariff war and export controls can tug at the story at any time. If you're building a position, it's worth thinking about protection against volatility. See you in the comments. Write how you see the NVIDIA story.
I haven't made any changes to my portfolio. The pie chart shows its current composition and its year-to-date performance compared with two S&P 500 strategies. So far, they're running neck and neck. Strategy 1, lump sum, one-time investment, blue line on the chart. The first investor bought an S&P 500 ETF on January 2, 2025, investing the entire $15,000 at once. They've held the position ever since. No additions, no withdrawals. Current performance, 34%. The blue line reflects this result, based on the most recent Friday closing price. Strategy 2, dollar cost averaging, gradual investment, green line on the chart. The second investor splits the $15,000 into 12 equal parts, investing $1,250 on the second trading day of each month into the same S&P 500 ETF. This approach helps smooth out volatility and reduces the risk of poor entry timing. Current performance, 48%. The green line reflects this strategy, slightly outperforming the lump sum method so far. Strategy 3, my fictional portfolio, red line on the chart. This portfolio is based on my own stock picks and investment decisions. It launched on March 19, 2025, with the full $15,000 invested in various individual stocks over multiple transactions. I've explained my choices in earlier videos. Current performance, 1.37%. Note, these performance metrics exclude broker fees and taxes. They reflect only market-based price movements. Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.